JPMorgan Chase and Company, the largest U.S. bank by assets, reported a solid financial performance for the fourth quarter of 2025, with adjusted profits rising 9% year over year, a sign of resilience in both consumer and investment banking operations despite a one-time charge tied to its acquisition of the Apple Card credit portfolio. For the quarter ended December 31st, 2025, JP Morgan posted net income of approximately $13.03 billion, or $4.63 per share, under generally accepted accounting principles GAAP. However, this headline result included a one-time charge of about $2.2 billion in loan loss reserves related to the bank's recent purchase of Apple's credit card business from Goldman Sachs. Excluding that reserve build and other acquisition-related effects, adjusted earnings climbed 9%, with earnings per share of $5.23, well above market expectations of around $4.85 per share. JP Morgan's total revenue for the quarter rose 7% year over year to roughly $45.8 billion, underscoring broad growth across major business lines. Revenue increases were driven by strength in net interest income, the profit banks make from lending and deposit activities, as well as continued robust performance in investment banking, payments, and trading operations. CEO Jamie Dimon emphasized the resilience of the U.S. economy, citing sustained consumer spending and healthy corporate activity as supportive factors for the bank's broad-based performance. The acquisition of the Apple Card portfolio represents a strategic expansion of JP Morgan's consumer credit business and significantly increases its credit card base. However, it also required the bank to build significant loan loss reserve up front, money set aside to cover potential future defaults, which weighed on reported profits for the quarter. While this reserve build reduced GAAP earnings, analysts and investors focused on adjusted figures view the acquisition as accretive in the longer term, given the scale and profitability of the Apple Card franchise once integrated into JP Morgan's broader consumer finance platform. JP Morgan's earnings report arrives against a backdrop of broader macroeconomic and regulatory developments. The banking sector continues to navigate changing policy proposals, including political efforts to cap credit card interest rates, a move JP Morgan and other lenders have publicly opposed, arguing it could restrict credit availability.